Generally, stocks that are considered competitors to each other within the same industry, sector, or subsector will often display a high positive correlation. Though realistically, this won't remain constant, and there can even be cases where the correlation drops significantly to even below zero. A higher correlation simply tells us the movements of the two stock prices are similar to each other. Unlike the basic comparison tool, the correlation coefficient indicator does not give any insight into the performance of assets within a particular time range, such as whether the price of one stock has risen higher than the other in a given time period. Correlation is only the relationship between two assets, so unlike comparing the performance of several stocks, we can't see the relationship in terms of correlation with 3 or more stocks with this indicator. With a group of stocks in the same sector, the times when there are lower correlations between stocks can help spot certain stocks as outliers that may be worth taking a further look at, due to their noticeably different price movement compared to the other stocks.